Hello traders, welcome to SammybrainFX. So in today's video, we are going to be analyzing Volatility 751X index. We are going to be doing this analysis using our strategy. That's a smart money concept. Of course, we focus much more on volatility indices. Okay, we trade synthetic indices. We analyze volatility indices space and jump indices, mostly volatility indices and jump indices. All right, so now without further ado, let's dive in. So now looking at the chart before us, this is a volatility 751X index. We see that the price has been moving swiftly, nicely. If we go to the daily time frame, we see before this all these moves, we see how we spotted these other trades, how we're able to take all this particular entry is one of the best entries I've ever taken. It's one of the best entries I've ever taken, one of the best trades I've ever taken. Looking at what we have here. Okay, so we saw that price has been on in an uptrend. If this is 8 hours time frame, so if we go to the daily time frame, we see that how price has been moving. We have this movement upward, this break of structure to the upside. So then this is where the movement started actually from. So we have this break to the upside, and then we saw price retrace and get to that zone, and then it moves up, and this movement went up, and then we have a break of structures to this upside. This high was broken by this, and then the retracement. There's another break of structure to the upside. So now after this break of structure, we have this particular zone right here. So if we go down to our 4 hours time frame, so we'll see how we're able to spot this trade. So now this is our 4 hours time frame. So here we had this break of structure. Let me take this out. So we have this break of structure to the upside here, break of structure to the upside caused by this particular zone. So in the 4 hours, we have this other block here that caused this break of structure to the upside. So now this is our trading model. This is basically what we look at for in smart money concept. So where we have this kind of model, where we look at for a break of structure. Now this is a buy model. For the buy model, we always look at for a break of structure and break of structure, and then retracement to the zone that caused the break of structure. Okay, and then we look at for our buys. Now, so in this particular trading model, if we have this, we have this break of structure right here. This is the break of structure. This is where the break of structure actually started. So this is the zone that caused the break of structure. Now this is one of the models we use. Okay, so we want to see a break of structure, and then we want to see an order block first of all. If you are new to our channel, you can go and check our previous videos for more of what I'm trying to show you. Okay, so you see much more of our trading strategy. Okay, so here we have a first model where we have a break of structure to the upside. So this is the buy model. So we have a break of structure to the upside caused by this particular zone. So we want to see a break of structure, and then we have to have our order block, the order block that caused the break of structure to the upside, and then wait for price to tap into that order block before we look at for our entry criteria. So now this is one model. Now in this particular model, we do not have inducements or liquidity. Okay, so now let's have another model. So this is another model where we have something like this, a break of structure. Okay, break of structure, and then we have inducements, this, and then this before we have our rebuy. So now in this particular model, you see what's the difference between this one and the first model. We'll see for this particular model, we have our inducements here, okay, which acted as a liquidity. So now we saw what happened here. there's a break of structure to the upside and then a retracement, and this is the zone that caused the break of structure. Now, so when price got here, it reacted and then it started buying. Some places would have started buying, you know, and then you saw what price did. Price retraced immediately, taking them out and then tapping to our zone before it went up to the upside. So that's exactly what happened here. Okay, so here we have inducement. Here there's no inducement, so we can here we have our inducement. Okay, let me reduce this. Let me check this, change this to black. Let's reduce this to 10. Okay, so here we have inducement, but here there's no inducement. And then of course here we have a break of structure. Break of structure, BOS. That's a break of structure there. And then yeah, there's another break of structure here. So, and here will be our order block. So this is where we'll have our order block. Oh, what's that? So this is our OB. That's our order block. Yeah, okay. So this is our order block. So guys, this is the first model. So this particular model, there was no inducement, and then this is another model, there's an inducement. So we can see these different patterns when we are trading. Okay, so we can see the different patterns. So now this is the first one, the first pattern we are seeing. Of course, for the bearish move, it's going to be the opposite of this and the opposite of this. Okay, so now after we have spotted out our break of structure, the other block that caused the break of structure, and then we'll have imbalance, and the next thing we wait for price to tap into our zone, and then we'll look at for our entry criteria. So now how does that look? So our entry model, our entry criteria, so this is what it's going to, how it's going to look like. So let's have this, let me do this. Okay, yep, and then have this. So once for this particular model, once price gets here, and then once price gets here, so we want to have this, see this before we take our trade. So this is the confirmation entry. We want to see something like this. We'll have a break of structure, retracement, so we'll have the break of structure, buy. So this is what we want to see price do before we take our entry. So this is our entry model. So here we have model 1 here, model 1. And here we have our model 2. So that's a model 2. Okay, model 1, model 2, and then we have our entry. So we'll have our entry model. So this is for our setup 1, our setup 2, model 1, model 2, and then this is our entry model. So now when price gets into this zone, we want to wait for price to get into this zone, and we'll look at for this model to buy. So this could be on our 4 hours time frame, 2 hours time frame, or 1 hour time frame. Mostly I used to spot out this in a 4 hours time frame. I'll refine the zone down to I'll refine the other block down to our 2 hours time frame or 1 hour time frame before I'll now look at for price tapping into that other block in the 1 hour, and then I'll look at for our entry. If you check our previous video, you're going to see a lot of those examples. So the same thing here, waiting for price to tap into this zone, and then we'll go to a lower time frame where it could be the 15 minutes, the 10 minutes, or 5 minutes, sometimes 3 to 2 minutes, 1 hour, or 1 minute to look at for our entry. So this is the kind of pattern we want to see for our entry. Okay, so now, and also for this entry model, we can also, the same thing that happened on the higher time frame, this or this, That's what we want to see on the lower time frame. So we can also have something like this. So we will have a break of structure. After the break of structure, and then we have an inducement, and then before we have a buy. So we can also have this kind of move on the lower time frame. So this can also be our entry model. So the same thing that played out on a higher time frame, we want to see that play out in the lower time frame. So now when price tap into this zone, we can have this for our entry here. We can also have this kind of pattern for our entry here. So when price gets here, we can also have this particular pattern for our entry here in this setup, or we can also have this same pattern for this particular setup for our entry. Okay, so any of those can happen. So what you're to do is to just pay attention, okay, and see that play out. So this is very important. All right, so now let's keep this aside. So now let's move on. So this is our 4-hour time frame. So we saw this break of structure to the upside. So here we have a break of structure to the upside. Okay, we have this break of structure to the upside. Okay, break of structure to the upside, and this is the zone that caused the break of structure. So now we refine this down to our 1-hour time frame. So refining this to 1-hour time frame. So refining this to a 1-hour time frame. So we waited for price. This chart just loaded for a very long time, so it's not showing us everything. So price actually tap our order blocks here on a 1-hour time frame. So when price tap into our order block on the 1-hour time frame, so we're able to go down to our 15 minutes to look at for our entry. We might not really have the best of this in this particular place. We can't get that clearly here because of this chart has been for a long time, so we can't really get to this particular place to see what happened in the lower time frame. But what actually happened here is that we refine this zone to a 1 hour, and then coming down here we're able to have our entry on the 15-minute time frame. So I'm going to post a video whereby I actually did this one separately. So but we are going to leave this and move on to the recent chart, so where we can have everything clearly. Okay, so now this is another example, since we couldn't get to the other one because of that chart has been there for a long time, so we cannot load it and get everything clearly. All right, so now looking at here, so we saw that after this big move to the upside, so price got here, we notice this is 2 hours time frame. There was a price broke structure to the upside, and this is a zone, this is the order block on the 2 hours order block that caused the break of structure. So if we go to our 1 hour, so coming to our 1 hour, so we'll have this here, we'll have this order block right here that caused that move to the upside. Now whenever I have an order block like this is the order block itself, and then I have something like this, I usually consider all of this rather than just focus on this particular zone. I usually consider all this zone, meaning price can react here and even down here. Okay, so we saw this break of structure and then waited for price. Now this particular model has inducement, so we saw that price broke structure, it retraced, it didn't get to our zone, it did as if it wants to buy, and then you see what happened, it came back. So we have this particular model in this one. This is that example. Okay, that's what we're having here. That's what we saw here. So there was an inducement here, and then price came in, and then it still took out another low and then tapped into our zone. So the moment price tapped into our zone, we waited for our confirmation entry. So let's go to our 15 minutes. Let's see if we would have gotten an entry there. So coming down to our 15 minutes. Oh guys, I'm trying to get this to load for 15 minutes. It's really not good. Let's go back. So now actually this entry, I actually took this entry on a 15-minute time frame. So if you look at the chart is unable to load. I don't know what's happening. So but normally we took this trade in a 15-minute time frame, where if we go to a 15-minute time frame, we are going to see our confirmation entry model, how it played out here. So price tapped in and then it bought. Okay, so after this big buy, we saw another retracement. So when price came back here, It took out this previous low, sweep this liquidity, and then it broke structure. I didn't take this trade because it did not give me any confirmation. So price broke structure again to the upside. So this is that other block. Remember what I said earlier, that this is that other block. I don't just consider only this, I consider the whole zone, because price can react here and also choose to react down, which is the same thing we saw happen here. So price came in and then tap into that other block. So the moment price tap into this other block, the next thing we did is to look out for our confirmation. I'm sorry I'm unable to show this confirmation here because of the way the chart is behaving. Okay, but I think here, since it's more recent, we'll be able to see it. So price broke structure and then tap into our other block. So now you see this particular model, there's no inducement like we had here. Okay, just like we have in this first model where we don't have any inducements. All right, so that's the same thing we're having here. So there was no inducement in this particular model. So price broke structure, tap into our zone. So the next thing we look for is our entry. So let's go to our 15-minute time frame. Let's see if we would have gotten an entry. So coming down to our 15-minute time frame, so what did we see? So we got our entry so clean and perfect. So what did we see here? So price got into our zone. We saw a break of structure to the upside. So this is our 15-minute time frame. So we got the entry in the 15-minute time frame. So price tapping broke structure to the upside. So we saw this break of structure, okay, because price was coming in this way. Let me show something. So price was coming in like this. Price was coming in. So the moment price tapped into our zone, it did this, it broke structure to the upside. So this previous high was taken, it formed another high, and then price tapped into that zone that caused that break, and then price went up. So that's how we're able to get this entry. Okay, so price broke structure. So this was a break of structure to the upside, and then this is that other block that caused that break of structure. Now this other block right here, this other block caused that break of structure. So price came in and tap into that zone. The moment price tap into that zone, that's how we're able to get our confirmation, and then we took that trade. So this particular model, okay, it's the same entry we have here for this particular entry. For this particular entry for this particular entry model, so this particular entry model is what we saw for this particular entry right here. So on the 15-minute time frame, so we saw that model, and that's how we're able to take this trade clean. Okay, so yeah, so that's the strategy. Like I said, if you check our previous video, you're going to see much more for this example. So it's the same model, it's the same strategy, and it's the same entry criteria. Okay, so we do the same thing, and we follow the same pattern. Okay, so we are consistent, and then we are very strict with our trading rules. Okay, so now what are we expecting V751X to do? So if we come back to our 1 hour time frame, and coming back to our 1 hour time frame, so we saw what happened here. So that we have all these lows created here, all these highs rather created here. We see that price came in, sweep liquidity, it took out all these highs, and then it's created a new high, and then it broke structure to the downside. We saw that there was this break of structure to the downside. So after this break of structure, so this zone that caused the break of structure, the price retraced. It didn't tap into that zone exactly, but it reacted there, and then it sold. And then we also saw that there was also another break of structure here to the downside. Okay, so in the future we are likely going to see price waiting for price to get to this particular zone, and then we'll look at for a sell in the future. So that's what we are waiting for right now, to see V751X do. So let's just see what happens. Okay, but that's actually what we are looking out for, but it could do otherwise. But for now, this is what we are looking for V751X in there. So that's that for that, guys. Just ensure you go through the video and then follow it one by one, and then ensure you look out for our previous videos. So if there's anything you don't understand, you can go ahead and ask me a question, type it at the comment section. So that's that for that, guys. Till we'll see you in our next video. Bye for now.